What if I told you that the single most powerful wealth-building tool in history is available to anyone, right now, from your smartphone? Not a secret club. Not something reserved for Wall Street insiders or millionaires. I'm talking about the stock market, and today, we're breaking it all the way down for beginners, so you can walk away from this video ready to take your first real step toward financial freedom. Whether you have $50 or $5,000 to start, this video is for you. Let's get into it. Section 1: Why the stock market is your best friend. Let's start with a truth that most people were never taught in school. If you keep your money sitting in a savings account, inflation is quietly eating it alive. Year after year, the purchasing power of your money is shrinking. But here's the flip side: historically, the U.S. stock market has returned an average of 10% per year over the long term. That means your money isn't just surviving, it's multiplying. Think about this. $1,000 invested wisely today could grow to nearly $6,700 in 20 years, without you lifting a finger after that initial investment. That's not magic. That's called compounding, and Albert Einstein reportedly called it the eighth wonder of the world. So the question isn't should you invest in the stock market. The question is, why haven't you started yet? Section 2: What exactly is the stock market? Okay, let's build your foundation. What actually is the stock market? When a company wants to raise money to grow, it can sell small pieces of ownership, called shares or stocks, to the public. When you buy a share of a company, you literally become a part owner of that business. If the company grows and earns more profit, your share becomes more valuable. In the U.S., stocks are traded on two major exchanges. The New York Stock Exchange, NYSE. The largest stock exchange in the world. The Nasdaq, home to the biggest tech giants like Apple, Google, and Amazon. The S&P 500 tracks the top 500 companies in America, think Apple, Microsoft, Tesla, and JP Morgan. When people say, the market went up today, they usually mean the S&P 500 or the Dow Jones moved. Simple, right? You're not gambling, you're buying a stake in real businesses that millions of people use every single day. Section 3: How to actually get started, 3:15 to 5 o'clock. Alright, this is the part most videos skip over. The how. Here's your step-by-step beginner roadmap. Step 1: Open a brokerage account. You can't buy stocks with a regular bank account. You need a brokerage account. Think of it as your digital gateway to the stock market. Popular platforms in the U.S. include Fidelity, Charles Schwab, Robinhood, and Webull. Most are completely free to open and take less than 10 minutes online. You'll need your social security number and a government-issued ID. Step 2: Start with index funds or ETFs. Now here's my biggest advice for beginners: don't try to pick individual stocks right away. Instead, start with index funds, specifically an S&P 500 index fund. When you invest in an S&P 500 index fund, you're automatically investing in America's 500 biggest companies at once. Low risk, low fees, and historically strong returns. Popular options include Vanguard's VOO or Fidelity's FXX. Step 3: Set up automatic recurring investments. Most brokerages let you set up automatic investments, even just $50 or $100, every month on autopilot. This is the most powerful habit you can build. You don't need to time the market. You just invest consistently and let compounding do the heavy lifting. Step 4: Be patient. The stock market rewards patience above all else. Short-term it can be a roller coaster. But long-term, it almost always goes up. Warren Buffett, the greatest investor of all time, said it best. The stock market is a device for transferring money from the impatient to the patient. Be the patient investor. Pushpin Section 4: Common beginner mistakes to avoid, 5 to 6:30. Now let me save you from the mistakes that trip up nearly every beginner. Mistake number 1: trying to time the market. Beginners often wait for the perfect moment to invest. But here's the truth, nobody can consistently time the market. Not even professionals. The best time to invest was yesterday. The second best time is today. Mistake number 2, panic selling during a crash. Markets will fall. They always do, and they always recover. When the market drops 20%, beginners panic and sell at a loss. But smart investors, they buy more. Because a market crash is essentially a sale on great companies. Mistake number 3, investing money you can't afford to lose. Never invest your emergency fund or money you need within the next 1 to 2 years. The stock market is for long-term money, ideally 5 years or more. Mistake number 4, following hot tips blindly. Your coworker's tip about the next big penny stock. Ignore it. Stick to fundamentals. Invest in quality companies or index funds that have a proven track record. Avoid these 4 mistakes and you're already ahead of 90% of beginners. Section 5, the mindset shift that changes everything. I want to take a moment to talk about something deeper than just charts and numbers. Most people are afraid of the stock market because they think it's for the rich, the educated, or the lucky. But I want to challenge that belief right now. Every single person who became wealthy through investing started as a beginner. Every single one. They didn't start with millions. They started with a decision. The decision to stop letting fear keep their money small. You have access to the same market that built America's greatest fortunes. The same market that turned small monthly contributions into life-changing wealth for everyday people who simply stayed consistent. The wealth gap in this country isn't just about income. It's about financial education and action. And by watching this video, you've already taken step 1. You don't need to be perfect. You don't need to understand every term right away. You just need to start, small, consistent, and with patience. 5 years from now, you'll look back at today and thank yourself for beginning.